that's an important point to make, that at the core, for those who are in favor of these disclosures, is about investors knowing what the climate risk is as we see changes happen as a result of warming temperatures. There was a study that came out yesterday, specifically, we should point out, came out from those environmental and sustainability groups that point to the fact that investors are still looking into ESG, particularly, portfolio companies looking at those ESG factors to determine inclusion, despite what we have heard publicly from those funds like BlackRock, who say we don't necessarily want to use that term anymore because it's so politicized. What are you seeing in terms of inflows into some of these funds? Is this still
Well,
an investor priority?
yeah, it certainly is. I mean, despite the political backlash that makes all the headlines, investors are still very much interested in climate risk, right? We've seen such a horrible year this year, summer, flooding in New York where you are. The climate risk is investment risk, and investors are poor in that way, are moving that way. The funds you're talking about are like the big public pension funds, the New York Public Pension Fund, California, Massachusetts, a lot of the blue states, where they're run by public officials and they want to look like they're focused on climate change. So they're making changes to the setups of the funds, and they're taking fossil fuel companies in particular, but also weapons makers and gun companies and stuff out of their portfolios. This not necessarily benefits the portfolio, right? If you don't have Exxon in your portfolio, you miss the fact that it doubled in share price in the last 3 years. But it does look better, and you're seeing investors move. And for these oil and gas stocks, they're becoming more and more like the so-called sin stocks, the tobacco stocks of the late 1980s and 90s.